What's up, everybody? Today we're going to be talking about Palantir stock, and I want to talk about their valuation. I want to go over some recent things that have been happening in the news and what you should be looking for in their upcoming earnings report coming out on February 3rd, so I hope you enjoy the video. I do personally own Palantir stock, and if we look at my portfolio here, it is my second largest position in the entire account. And in terms of individual stocks, it's the biggest individual stock position that I have. I currently have 111 shares, and I'm up around 850% on the stock. So it's safe to say that I pay attention to Palantir pretty closely, and I think there's going to be a lot of good information for you in this video. If you're new here, my name is Sheldon, and I make completely transparent videos talking about how I invest in the stock market. And keep in mind, I am not some self-proclaimed expert here. I'm not a guru. I'm just some dude that has been investing in the market for 5 years, and I like to share my experience and what I've learned along the way. So if that sounds interesting to you, if you want to learn and stay updated on the market, then subscribe to the channel and let's all learn and build our portfolios together. Let's dive right into it, and I want to start by talking about why I've been selling off parts of my position here. Originally, I did have up to 160 shares of Palantir, and I've slowly started to sell off my position since then. I have done two big sells. Basically, the first time I sold not 100, but I sold 25 shares, and then the next time I sold 24 to get me down to that 111 number. It felt lucky, and it brought me down to a position where I was a little bit more comfortable. Palantir, at the end of the day, it's a risky stock. It's a highly valued stock, which we'll get into. And having a large portion of my portfolio riding just on Palantir made me feel a little bit uneasy. So, chipping away at the stock, taking a bit of profits has just been a little bit of a sleep better at night move. And I haven't cycled, I cycled the first portion that I sold off of Palantir into AMD. And now the last portion that I just sold is just sitting as cash in the account. So I don't know what I'm going to do with that money yet, but it made me feel a little bit better about my overall strategy, just taking a little bit more money out of Palantir. So there's no way around it. Palantir is a highly valued company, and so if we pull up their stock chart here, we can see that they're trading at a 377 price to earnings ratio. That's crazy. If you don't do a lot of stock research, just know that that is an insanely high multiple of earnings per share, price to earnings, and even their price to sales ratio is, which I believe we can find right here. Their price to sales is 66, which is a multiple of their revenue for their market cap, and price to earnings is a multiple of their earnings per share. So, they're pretty high. And if we compare that with a company like Oracle, who is a Palantir competitor, pretty much, big data analytics. There's a couple other Palantir competitors out there, and we'll look at some benchmarks in their industry as well. But Oracle is sitting on a 44 price to earnings, okay? 44 price to earnings compared to 377. That's crazy. And then if we look at price to sales of 9. So Oracle's got Oracle is trading at a multiple of 9 from their revenue and a multiple of 44 from their earnings per share. And so you can clearly see that Palantir is there's a lot of future growth baked into the stock price, right? And obviously, it's not for no reason. Palantir fundamentals are really solid, and the company's been growing exceptionally well, and they have really high growth rate numbers, and they've had an outstanding year in pretty much every aspect that you can have in the stock market. They joined the S&P 500, they joined the NASDAQ 100. I think I have that here. If we pull up, Palantir Technologies, MicroStrategy have been added to the NASDAQ 100. That happened in the latter half, or maybe the last quarter, I think, of 2024. And obviously they joined the S&P 500 as well. And if we look at, just some of their revenue growth numbers, this is on an annual basis. We have 47%, 41%, 23%, 16%. And I believe we'll look at what they're guiding for in their next earnings release. But those are really high earnings or revenue growth numbers, right? If we look at Oracle, it's not going to be that high. We got 13, 14. They had a really good 2023. And then not 13 and 14. 3, 4, 17, and then 6. I don't know why I said 13 and 14. But so obviously you can see that Palantir, even though it's way more highly valued and it's a riskier asset, it's more volatile, the underlying company has been growing at a much higher rate. Oracle is more established. It's a big company that it has just its foot in the industry, and they grow a lot slower now, so the earnings expectations aren't as high. And that's why the price to earnings ratio and price to sales is so high on Palantir, because it's just, the expectation for growth is huge. They did recently turn profitable in the last couple years. If we look at, where is it here, net income, we can see even just by this graph here that it was in 2023, it was their first year of being a profitable company. So that was, again, another catalyst for the stock price. So a lot of these catalysts are in the past now for Palantir, and now they just have to execute on these growth expectations, which is going to be increasingly harder and harder to do. Again, I'm not bearish on the stock, and I still have a solid sized position, but it's just, you got to keep these things in mind. Like, a lot of these things that are catalysts when you buy into growth stocks have already happened for Palantir. Another thing that happened recently is Trump got reelected, and he's back in office now, and typically, we know what his stance is on defense spending and military spending. That could be a good thing for Palantir. That could be a positive catalyst. Another thing is that, a lot of the Palantir co-founders, Peter Thiel, obviously, he's definitely in sort of that central circle with Trump and JD Vance and a lot of those big tech CEOs. JD Vance and Peter Thiel, they've had a relationship before where Peter Thiel actually helped fund JD Vance and his campaign. So they're all pretty tightly knit together, and I think that it's just something to think about, right? That in terms of government contracts for Palantir, it's probably going to be a good thing, if anything, right? And one other thing that's interesting, actually, is that Alex Karp is obviously the CEO of Palantir. Peter Thiel's just a co-founder, but Alex Karp has come out, and he doesn't like Trump. He's publicly stated that he is definitely more on the liberal side of the political spectrum than Peter Thiel, but he also has said that, he thinks that is a productive thing to have at the top of a company where two people are on separate sides of the political spectrum, and it's just useful because they can challenge each other's beliefs, and the company gets driven forward with, both sides in mind. And I totally agree with that. And I think Alex Karp is a really smart guy. And I'm glad that he says things like that, right? Because not a lot of CEOs come out and say that. So hopefully that paints a little bit of a picture of currently where Palantir stands and what's been happening a little bit in the news. Now let's talk about earnings. Okay, so they are reporting earnings February 3rd, and it's going to be after a lot of the big technology companies report, which could have an influence on how the stock price reacts, which we'll talk about. But I want to look at their guidance from their last quarter, quarter 3. So they guided to have revenue between 767 and 771 million. And the revenue that they reported last quarter was 725. So that's a pretty big jump, about $40-ish million jump. Not sure what percentage that is. But they also guided to have adjusted income from operations between 298 and 302 million. And from their last quarter, they had 275. So, that would be, they're guiding to beat here, obviously. And, hopefully they can come in and beat. That would be big, which I do think they will. I don't know if they're going to beat everything that I'm going to talk about here, but, they're raising their revenue guidance revenue guidance for the full year is going to be 2.8 billion. And I believe their revenue for full year 2023 was 2.2. So that would be a pretty big increase in revenue, right? They went from 1 billion to 1.5 to 1.9 to 2.2, and now they're guiding to go to 2.8 or a little bit over 2.8. So we'll see what numbers they come in there. I believe if they come in, lower, if they miss on revenue expectations, which, let's be honest, I don't think that's going to happen. But if they do, the stock price is going down. That's for sure. Maybe even if they miss on anything that they're guiding for. Like, there's a lot of pressure on Palantir right now. And one thing that I think is essential, actually, for my bullish thesis in the long term of Palantir is their commercial revenue growth. And I guess we can specifically look at the U.S. commercial revenue growth here, because they're raising their U.S. commercial revenue guidance to 687 million, representing growth of at least 50%. So from Q4 in 2023, so last year, they reported 457 million from U.S. commercial revenue. So let's hope that they can come in and beat that, because, they have a lot of government contracts, obviously. Like, they reported, what did they report for government? U.S. government revenue just in the last quarter was 320 million, which is like almost double their U.S. commercial, right? Like, they make more money from U.S. government right now. But there's a cap that to U.S. government, right? And the U.S. commercial market is a lot bigger than the government contracts that they could be potentially getting. Yes, the government contracts are good to have because they're incredibly recession resilient, and Palantir is so in with the government right now that those contracts are probably locked in, and they're locked in for a long time, regardless of what happens to the economy, right? So that's a really good, safe thing that Palantir has, and something that you're investing in when you're buying into their stock, is you're buying recession-resilient contracts, and that's a large portion of their revenue. But in order for this company to grow, in order for them to get to Oracle status, and if you want to see Palantir be a $400 billion market cap company, they need to continue to execute and grow their commercial revenue. Like, guaranteed, they need to keep growing that, right? Because there's going to be a certain point where there's no more government contracts to be had. So I'm really hoping in the next quarters and coming years that Palantir can really start to even out the amount of percentage that they make from commercial and government, like catch up a little bit, maybe even surpass that, because that's going to be just really good for the longevity of the business and the amount of money that they make and the scalability of it. So they're also guiding for key free cash flow to in excess of $1 billion. And I believe that's not a crazy increase. I believe their free cash flow was like 980 million. So it'll be good to pass the $1 billion mark there. But if they come in, they beat on quarterly revenue expectations, year-over-year revenue expectations, they beat on adjusted income from operations, and they beat on free cash flow, and, U.S. commercial revenue guidance, that could be pretty good for the stock price. I could see it going back up, if they come in and just crush numbers. And on top of that, or I guess I'll get into that in a second, what I think the stock price could be. But if we look at the earnings calendar, right, because this is important. This is really important. We're going into this week right here. So starting Monday, we have AT&T reporting, SoFi's reporting, not too many there. And then we go Tuesday, Lockheed Martin, Starbucks, still not really big tech. You start to get to Wednesday, though. This is Microsoft now, Meta, Tesla. This is a big day. Microsoft, Meta, they are market movers. They're going to come in. And if a lot of those companies, they can crash the market. Let's be honest. Like, big tech can crash the market. If they come in and start missing on guidance and not on expectations, and maybe even they lower guidance, that could be a bad catalyst for the market. And if the market's going down, Palantir is not going to survive if the market's going down. Even if they come out and beat everything, all expectations, and crush it, if a lot of the big tech companies come out and report bad earnings, that could still lead Palantir to going down, and at least in the short term, right? But and this is all speculations. Like, I'm not saying that any of this is for sure going to happen. I'm just kind of talking about what I've seen in the market in my past. And so we got all of those big tech companies reporting. We got Apple, Visa, MasterCard, Blackstone, Caterpillar's coming out. If you guys watch the channel, Caterpillar's big for me. I love Caterpillar. That's a good stock. what else? We got Friday coming in, and then so that's a big week, right? And then we lead into the next following Monday, and boom, we got Palantir after close. So it's gonna be after the bell next Monday. Definitely going to be interesting to see where the stock price lands after earnings. So these are some of the things that I think you should be paying attention to. You know, it's always good to look at the prior quarter's guidance and what they released in their earnings statements. And then, you know, make your bets if you think that if they're going to beat, if they're going to miss. You know, I personally think that if they do, like, I think big tech is going to come in and generally have a good earnings season. And then I think Palantir is going to come in and also have relatively good earnings. And what I hope is that the stock price just chills for a little bit. You know, I'd hope it doesn't fly up into the 90s. If it crashes, it goes down to the 60s, and I'm okay with that too. I think that's a high possibility. Most ideal situation for me is that it just kind of chills out. I think Palantir needs time and needs a couple quarters to go by to, like I said, grow into their valuation. Like, they're so highly valued that it's like you get hand-me-down pants or like clothes or hockey equipment or something from your older sibling, and they're still too big for you, but you have to grow into it. Like, the Palantir right now has to grow into their valuation. And the only way to do that is to continue to come out with these revenue with solid numbers in their earnings, right? So that's everything that I kind of wanted to touch on in terms of their earnings. Let me know if there's anything else that you guys look for in Palantir's earnings. I know it's a pretty popular stock. You know, obviously it's it's had an insane year, and hopefully it keeps going. You know, I hope it does chill out though. If they do miss, I could see it going down into the 60s, even 50s. Like if big tech comes out and things aren't as good as people were maybe expecting, you know, but as a range 50 to 90, it's going to float around in there. For the next year, I would assume. Hopefully it just chills out and stays around 70 for a while. I'd be totally comfortable with that. I'm not going to sell any more shares. I'm sitting on 111, and that's where I'm sitting for now. I'm comfortable with that. Lucky number 111. I don't know if that's actually a lucky number, but it could be. So anyway, that's everything that I wanted to talk about in terms of Palantir in this video. If you guys have anything that you're looking at in terms of Palantir that I didn't talk about, please let me know. You know, I'm here to learn. I'm interested in what you guys have to say in regards to the stock as well. Thank you so much for watching. As always, I wish everybody the best of luck on their investment journey. Peace.